Welcome to the DeFi Standard. It's Mickey B. Fresh, and we got Patty XRP, and then we got a special guest today, Michael L., one of the elite professors from the Mickey B. Fresh Patreon group. So, if anyone's not aware, we've had some bombshell news released today. If you're a Flair fan, the Flair Finance white paper has finally been released officially. And Patty, we just briefly talked about this before going on with Michael as well. So we haven't done a full deep dive into it, but we do want to point out some really, really fascinating things that were brought to light with this Flair Finance white paper. Now, this has been highly anticipated by myself and many of us in the DeFi Standard, Mickey B. Fresh Patreon group. And probably the biggest thing that came out of this white paper that I think everyone should know is that Flair Finance DeFi is going to be 100% KYC, AML, regulatory compliant. So what do you guys think about that? First DeFi ecosystem that I've seen that's regulatory compliant.
Yeah, I'll start off with, obviously we're going to be moving this way, especially in the US. Like, you're already seeing calls for regulation. So, I'm very excited that they're taking this approach. I know maybe not everybody will be happy about that, but them having tax solutions built in, KYC and AML built in, that's just going to make it a lot easier on many people that are trying to be compliant with the laws that they live in. So I think it's just like a great step for getting people to want to adopt their platform.
It absolutely is. What's your thoughts, Michael, on this?
No, I 100% agree. I look forward to this this future where I don't have to manage everything by a elaborate spreadsheet tracking everything, or having to purchase a special software to manage everything. So this is the inevitable future that we're already going. If you take this to what people are used to, right? Like, I'm sure everyone's aware of TurboTax or H&R Block or any of those other solutions that do your normal taxes. This is the direction that we need to go. Taxes do stink, right? In the sense of that, that it's a pain, but it's awesome that we now have a solution that is potentially going to help us manage that without us having to directly manage it, right? To me, that is huge. It makes me feel more secure about using this protocol, right? Just in the sense of protecting my own personal finances.
I totally agree. Out of all the DeFi that we've seen built on basically Ethereum and built on Binance Smart Chain, everything has pretty much been to skirt regulations and say, well, you don't need to use KYC. You don't need AML regulatory requirements to use Uniswap, to use PancakeSwap on Binance Smart Chain. Now, Flair Networks is coming over, which is a fully decentralized blockchain, which is going to have bootstrap decentralization right out the gate. And now Flair Finance is a DeFi dApp ecosystem built on top of Flair with their own governance tokens and dApp tokens, Y Flair and Y Fin. Now, the protocol is a compliant, decentralized, autonomous organization with added KYC and AML regulatory features, ensuring a trustable solution. It also offers a unique features like tax solutions to help ensure users are supported with the tools that can help them accomplish their goals. And what I think is important to recognize here is that the Flair network team and the Flair finance team understand that they're building institutional grade, or at least enterprise grade, user-friendly DeFi that's going to comply with the travel rule, with FinCEN, and bring on institutional flow. Because at some point here, gray area retail is not going to be enough to support DeFi, and it's not going to take it where it needs to be. If you're looking to really make this the foundation for the financial system, you can't avoid KYC and AML for, just ignoring it because it's software. Right, guys?
Yeah, exactly. And I just see like Spencer H pops in the chat. He's like, KYC, AML makes it easier to manage for your whole life. If you're not doing anything nefarious, nothing to worry about. And yeah, it's just going to make it much easier for us. Like I was only thinking about, when I do all these swaps or move over, into different liquidity pools and stuff on Flair Finance, that's going to be a massive pain to do and then try and track all that on my own. But the fact that they're going to build in the KYC, so I know I'm not going to get in trouble for anything, and then the tax solutions are going to be there for you to pull. That makes me really excited to use it, and at least takes down on some of the pain of DeFi. And ultimately I think it's going to lower barriers to entry. Taxes is extremely confusing for everybody. So if you make that easier and it's built into your ecosystem, I just imagine more people are going to be open to using it, which ultimately is going to bring more value and liquidity in.
I totally agree. With this, we're going to have... See, and the other thing about Flair Finance compared to other DeFi is you're going to have the 4 trustless F assets right out the gate on the platform. FXRP, FDoge, FLTC, and FXLM. Now, before we go any further, there are a few new additions and nuggets that were dropped in this white paper that answer some of our questions that we've had, and also are surprises that are just better for us to earn more yield. So first things first, when it comes to providing liquidity in the liquidity pools, right? They call it decentralized on-demand liquidity. Now, Flair X is the decentralized automated market maker liquidity pool. It's like a DEX, but it doesn't have an order book. It's just swaps between different 2 assets, right? Now, if you provide liquidity to these liquidity pools, you need to provide 2 tokens of equal value. But by doing that, if you use an F asset, you're able to earn triple rewards. So now it's finally been confirmed that you earn liquidity fees, and we got confirmation finally that you'll earn your Spark daily rewards for having F assets on Flair and minting them. Plus, you'll also have then the option of the Launchpad rewards, which means the LP token you're able to then take and use on Flair Farm. I believe that's what's going on here.
Yeah, that's what they're saying. And so one of the nice things they mentioned about the LP token, because it's kind of, it's a little weird to understand how that works, but essentially the way to describe it is it's just a key to unlock your built up yield that you've earned from the Flair farm. So you can take those LP tokens and it basically is a key to unlock that so that you can pull it out. And those are accrued from participating in a liquidity pool.
Yes, and absolutely. And this is also going to give everyone instantly use cases for their F assets. So with Flair Finance having 6 different DeFi protocols, this is going to come a month after Flair Network goes live, and there'll be a snapshot. We'll get into that later on, but look at all these different assets that are going to be used on Flair Finance. You can't say that about other networks that were just spun up. They're usually just random, I don't want to say crap coins that are just issued out of nowhere. Stellar is not a crap coin. Litecoin, Dogecoin, XRP, those are top 15 crypto assets. And now Michael was saying earlier, Flair Wrap allows the ability for a stablecoin to come over, right, Michael?
Correct. Multiple, actually technically multiple stablecoins if you think about it. Mm-hmm. You'll have to find the direct list.
Where is it? It's here.
Type in YUSD.
Asset wrapping. Here we go.
Yeah.
So it looks like they're modeling it after something similar to Yearn Finance and Curve, right? Which was already alluded to by Hugo and in some of the white papers, right? So what it looks like what they're actually going to do is they're going to create a basket of multiple stable coins. And I think there's a misconception with the stablecoin is that all of the stablecoins are existing at a given time at 1 USD, which the actual fact is that they don't. So the beauty of having a basket is that you can swap for the highest value stablecoin at any given time, um, dynamically, which actually gives a lot of power to the user, in the sense of that, you're always swapping at the highest yield, um, on the network, right? I mean, yeah, you're talking about a dollar, but still, I mean, those percentages add up over time, especially if this is like something that is going to be taking on a lot of value in a over a long period of time. I see it as a huge advantage.
Absolutely. And stablecoins are the foundation for DeFi. Now, we have to always look to Ethereum. Ethereum's like the big bang of where DeFi was born out of, right? And it was born out of proof of work. Flair network doesn't have any of the negatives of proof of work or of proof of stake. So it's able to be basically the second big bang of DeFi in a regulatory manner. So look at all these different assets. So YUSD looks like the one that's going to come over in Flair wrap, right, Michael? Just to handle those liquidity pools.
Yeah, that's what it looks like they're going to call it when it's on the Flair Finance ecosystem.
Yeah, because you need that to swap against. So if you're an FXLM or if you're an FLTC and you want to swap to more Spark, you could do that easily. Or you could go right into USD, because you're going to have to balance out. If you're going to provide liquidity to these Flair X two-sided pools, you have to balance your assets out. So you're going to need to always use this Flair X swap at all times. So it's something you're going to use on both sides. And the more volume that goes through it, the more fees it accumulates. Look at Uniswap. There were many days that it did more billions in volume than Coinbase has done. So the model has already proven out. And the liquidity providing, it allows everybody to be a liquidity provider, not just the whales, not just the the institutional market makers like Citadel, who in GameStop, and the hedge funds who basically held down all the retail people by having decentralized liquidity pools. Everyone could be a market maker, and we're all on the same level playing field. We could all earn profits, and no whale can just come in and basically manipulate the price. I mean, to an extent, though, these don't have prices built into them, right? Guys?
Which
Like
were you saying doesn't have the prices?
automated market maker liquidity pools. There's no price.
No, there's no base price in there. I mean, it's a float.
It's a float.
It's at the like simplest way to explain. It's a float.
Supply and demand. And what I think is important here is if it's regulatory compliant, we're going to get more institutional arbitrage then, which will bring more liquidity into these Flair X pools. And the more fees that get racked up in these liquidity pools, the more that you earn as liquidity provider, and the more that gets built up into this APY cloud, which is kind of like a intelligent, autonomous monetary system, I guess you'd call it, Patty.
Yeah, no, I think you can definitely refer to it that way. It's, it's forward thinking because it has certain thresholds set up to the upside and downside for certain actions to be taking place from these reserve pools that are built up from fees across all the products. So like, let's say, the market in general is going into a downturn and people are using it less. So the governance staking pools, the yield falls below the minimal APY rate for the year, like based on how they calculate that. Then it will disperse like the built up reserves of YFlare to cover that gap between whatever the APY is actually at and that minimum APY threshold. So like it's guaranteeing yield and it's providing a buffer. And I like that they're using some of the fees from all of the products across the ecosystem to provide a buffer for the entire thing. I think that's a really smart way to do it. And it's going to give people like an added layer of safety. Michael, I know you got some good thoughts on that if you want to jump in too.
Yeah, I mean, I think my first thought is that this is, at least for the stress distributions, like this would be in the real world to be very similar to what most people understand is like a circuit breaker in the stock market, right? This is a protection mechanism, but and it shouldn't be looking as a necessarily a bad thing, because I mean, there, if you don't mind, Mickey, to scroll up just a little bit.
Oh, sorry.
Yep, because there's actually an
Here?
opposing. There's keep going up
Mm-hmm.
to what is it? Yeah, X-tax distribution. There's actually the opposite mechanism that works to advance yield when everything is moving forward, right?
Mm-hmm.
So, you know, what I really see about this, one, if this is integrated with the APY cloud, in the direction that I personally think it's going, is that over time, the algorithm will get more robust, and these protocols will become
Self-sustaining.
yes, self-sustaining. That's probably actually the best way to put it. I was going to say use less, but yes, self-sustaining, in the sense that like it will become very dynamic in the sense of when they're actually implemented, thus like propagating like healthy network stability in times of like extreme volatility, both on the up end and on the down end. And you know, while those are exciting, you don't really want those in a like enterprise level like financial tool, right? Volatility at the enterprise level is not good.
Oh, I completely agree. Now, let me just clarify before a million questions come in. Many of you are probably like, what are they talking about right now? We're talking about the balance between the utilization of these DeFi protocols and then the APY cloud pulling in fees and redistributing that to those who stake in the governance system, right? Is that what you were getting at there, Michael? Part of it?
No, that's pretty much
Yes.
spot on.
So
I mean, much more eloquent than than I
Yes.
made it to be.
Well, I studied a lot of the Ethereum DeFi ecosystem, and as much as there is composability between these protocols, there has been a lot of blunders. For example, when Compound came out after MakerDAO, it completely destroyed the ability for DAI to offer a interest rate. It just crushed it because the other protocol just took everything away from it. And what Flair Finance is doing, they're not only building 6 DeFi products together to work at once from the beginning, they're also building in a balance between the utilization of the protocols, which means people using them, like using the Flair farm to earn yield, providing liquidity to earn fees, and balancing that with 40 million Y Flair out of 110 million Y Flair sits in the APY cloud. That's kind of the buffer if the APY cloud can't collect enough fees to pay out the governance staking. So after you earn YFin and you earn Y Flair, if you don't want to utilize it back in the protocols, you could just governance stake it and earn a guaranteed yield of 5 to 35%. And when the excess distributions kick in, it could go much higher than that. But what it has is a safety net. So for some reason, if the utilization of Flair Finance DeFi doesn't like boom, right? It will release these stress distributions, which will start releasing that 40 million Y Flair to support the yield that you're guaranteed. So all of this is being done to support the infrastructure ecosystem so that new copy and paste meme tokens aren't popping up to just give out like marketing promotions of put your token in this liquidity pool and we'll pay you 1,000,000 times yield in some random crap token you never heard of. That's what Flair is avoiding. By doing things like this, they're building a system that will automatically adjust based on market conditions. So yes, it has to do with the volatility, but it's the volatility of utilization of the network and by having this extra supply too. And then rewarding those who do utilize the network by earning extra fees. So it also has a launch pad built into it. Now, many of us are familiar with Binance Launchpad, right? How many tokens have been launched off of there? Hundreds. Now, it's going to be very different with Flair Finance. Governance will vote which tokens get launched. And if you're holding YFin and YFlare, you'll automatically get a percentage of those new tokens that are launched off of the Launchpad. It's unlike Binance, where Binance unilaterally just makes decisions because they're an exchange and, they'll just push whatever out there and they'll get paid themselves, but they don't give back to the users. So Flair Finance is doing everything in their power to develop a decentralized autonomous organization. Now, that word we've heard before. We've had some people call it a digital security in this community. So I think we should clarify what that really means. It's, what Flair Network is. And it's what Flair Finance is going to be. It's not what the XRP ledger is. So it's once the network is able to sustain on its own with the governance and the community managing all the decisions for the network. So that's a distributed autonomous organization. How do you regulate something like that? You can only regulate the end users. And that's what's going to go on here. So I think that is a great choice by them. This might get some backlash. I'm just going to give everyone a heads up. But it should make you feel more comfortable that there's an insurance mutual pool built into this too that will backstop it. And it'll be Web3 enabled, security audited, and you could use it at your risk tolerance. Like, for example, Michael wasn't a big fan of Flair Finance a couple weeks ago, and I think he's coming around slowly.
Well, I mean, the more and more that I see safety nets involved, then the more and more I'm willing to explore it, right? Like, I think the reality, and I've expressed this many times, is that, everyone should do your own research, right? Yeah. But it seems to be that Flair Finance is evolving rapidly to meet not just consumer grade expectations, but what I would consider on the cusp of being enterprise grade expectations. Because if we circle back just a little bit, back when you were talking about KYC and AML and all that kind of stuff, the reality is if you want to be a big player, right? All of the big players are KYC and AML integrated, right? That's just what you want to do. So this isn't a bad thing. To me, this is a huge positive thing. This is something that opens up the door for possible large scale investment into the Flair network. Now, whether or not that's going to happen, I mean, I'm not a wizard or what do you want to call it, sage or whatever, but to me, like, that's the direction obviously they're targeting and moving forward to, and that's exciting for me as a potential person who wants to potentially put assets into their physical or a cash, right? My own hard-earned cash into this network. So yeah, I am honestly, I am turning around to it, and I'm excited to see where more and more of this will go.
Yes, me too. And the fact that they say they're institutional grade, a lot of us shrugged that off when we first heard it, but just so everyone knows, it looks like that process to where you're going to have to register KYC, AML, do your thing, is probably going to be at the point when you claim your DFlare and swap it for YFlare. There's minimal details here. They say you could use Civic. This would open up institutions to feel comfortable using any FlareX liquidity pools because they know that the counterparty is already guaranteed to be not a money launderer or a blacklist or a foreign bad guy, right? I mean, that would make them feel comfortable. Who do you know who you're dealing with on Uniswap if you're an exchange, Michael, and you're,
No,
using,
100%.
you have no idea, no clue who the counterparty is. So just like on a centralized exchange, you don't know who that counterparty is you're trading with, but you know that the exchange has KYC'd them, right? So at least anyone who somehow they're going to be able to at least try to verify some sort of KYC AML, and it would be nice if they could do it in an anonymous way. Like, you don't need to share all your information with everybody. So this might create some FUD.
There's one thing also to consider that's actually a positive too when it comes to KYC AML is that it enables direct off ramping right now, especially that banks are some U.S. banks, and I can't really speak for foreign banks, but there are U.S. banks that are getting or at least fintechs that are getting banking charters, right, that directly interact with cryptocurrency. Having KYC and AML, it will allow you to directly off ramp to them into fiat. And, I've always advocated that, at the end of the day, at least for right now, in the immediate future, you need to have a fiat off ramp if you want to, do whatever you want to do, right? Take profits, right? It's just that's a reality of the situation that we're currently in the present day. It makes it easier for that interaction to happen when two partners are at equal standing, right? If both partners are at the same, in this case, both are have the same regulatory standards, it allows them to interact seamlessly without any kind of worry about liability between that interaction.
Exactly. That's a great point. So, for example, what you're saying is, say, Dell Chain or Standard Custody played the role as an agent. Nothing's stopping them from creating some type of application that allows users to cash out from their app through the Web3 browser extension or whatever it is to fiat through their banking app to the legacy payment rails. Like, that's very possible in the future. And we don't have that with DeFi. What do you have to do? You have to go to an exchange.
Yeah, and also like the exchange is going to be an easy option. Like we already know Bitrue is going to be plugged into the Flair network, and then Uphold just came out and said they're going to support the Flair Finance airdrop today. So, we're already seeing them that are ways that you can cash out now. And if, you're very much directly plugged in with the KYC already enabled, that just seems like a really easy way to move on and off. So and then we're going to have Trustline building out their on and off ramp. So I'm curious to see how they'll fit Ari into the system too in the future, especially if that becomes like a big stable coin. That's the nice thing about the whole governance is that we're going to be able to propose and vote on new tokens to be listed on the platform. So let's say there's some new project that wants to launch through Fair Finance, but like you were saying earlier with Compound, it was basically draining from other DeFi applications on the Ethereum ecosystem. So like now we can evaluate new projects that want to launch and make sure that they're going to work like synergistically or offer some kind of product that's really needed at that point in time. So it's just like, I feel like a lot more thought out build over time. Rather than just like throwing a bunch of stuff together to see how much money can be put in it at once.
Exactly. And I guess it can't go without saying here is that it looks like Flair Finance and both Trustline are integrated the native capabilities of the Flair network. So everyone who mints F assets, you earn daily Spark rewards. It looks like Flair Finance has adopted that if you use FXRP or any F asset in their applications, you'll still earn the daily Spark rewards while simultaneously using that F asset in a smart contract application. Also, same goes for Spark. You'll still be able to delegate your FTSO vote if you're using it in an application. These are advantages that other, smart contract networks just don't have natively. If you stake a token in proof of stake, you can't use it somewhere else in an application. Not that I'm aware of. Cardano kind of has their thing going, Michael. I know you know. But Flair has very unique capabilities here. So it's going to attract these hedge funds, these institutions, these banks or crypto banks and crypto custodians. Really, we're going to see new types of business models develop. Because remember, there's a whole network of signal providers, and then there's going to be a network of agents. Now, they're just as welcome to use the DeFi products as we are. So why wouldn't they take advantage and borrow and earn Y Flair and earn Y Fin too? So it allows us as a community to level the playing field so no whales could come in and just overhaul everything. And it keeps everything at a fair distribution out the gate. And I think that is one thing important when you're building a network. And Flair Network, Hugo, like they really put a lot of effort into making sure that the distribution was fair and that the network's decentralized out the gate. And I just think that's powerful moving in compared to things like Binance, where Binance kind of, does whatever they want with their bridges.
Yeah, and to add on to that, so the way that Flair Finance is going to incorporate the like built-in reward system that's coming from like layer 1 of the Flair network, like that's exactly what we want to see built out. Like you don't want to be putting people into these weird opportunity costs where it's taking away from one part of the entire network and giving to another. So if you know that you're going to get the layer 1 rewards in anything that you're doing on layer 2, then those are going to act a lot more synergistically and advance like the network in a more like sustainable and scalable rate, in my opinion. So I love that they incorporated that. And, we've harped on this before, but that's something that, the Flair team really points out in the white paper, that applications that use Spark or the F assets, like you don't want to put people at a weird opportunity cost. So I love that they're doing that. And then also, like, if you think about the governance staking pool versus providing liquidity in a product or like using your assets as collateral and Flair loans, like those two things are kind of like one's utility and one's like support for governance, and they're going to have a balance between each other. Because if too many people go into the governance staking pool with their assets, then their percentage there is going to start to lower. So that's going to force people out where the rates are higher if you utilize the product. So it's going to keep a really healthy balance between the two, which I just think that's a perfect, like maybe not perfect, but like a very smart way to design it from the get-go.
I completely agree. And I think we could talk about distribution here. I mean, tomorrow I'm going to do another video and I'm going to break down some of these specifics. But they kind of give us an answer here that 6,874,000,000 Spark is going to be available on circulating supply at launch, right? That doesn't include Flair team, Patty?
I'm not sure yet.
15%. It says, well, maybe 45 million, 15% of that. Well, that's assuming
I think that's
claims.
not including the Flair team. But also, like, we know that not all of the Spark is going to be claimed by XRP holders. So that number will decrease over time.
Okay.
They're just basing it off the total available amount. So, like, we know if some of the Spark goes unclaimed, then it's going to go into the F asset general rewards pool. And they're already assuming that was going to be at 20 billion Spark. So that means that the XRP holders would have only claimed around 30 billion. Mm-hmm. So, we could have a much better ratio based on that when we get to the time.
All right. So let's assume this is around 5 billion Spark out there. Now, 15% of that 5 billion is going to put us at roughly around, 5 billion will put us at, I don't know, a little under 2 billion?
No.
Under one. About 1 billion, right?
Like 105.
Okay. Like, and now you got to include all the rewards that people are going to earn in that interim, though, for a month, right?
So,
yeah.
Yeah, that's what it seems like.
So it'd be the 15%, what everyone earns. But the point I'm trying to get to here is not everyone's going to claim their D-Flair. There's no way. With only Bitrue, Uphold, and some others supporting Flair Finance, there's going to be 40 million D-Flair to go around. And that will go to those who do claim. You have to have your Spark in a supporting Flair Finance wallet or exchange, and then you'll receive D-Flair, which will be Y-Flair. Right now, you get 0.0058 Y-Flair for every Spark. That, I think, will go up once we see actually how many people claim. So
The other thing to consider too about that is that they only give 7 days to claim, right?
Mm-hmm.
Right. So I mean, you know, some people unfortunately are going to be lackadaisical, and they're just going to miss out. They're going to miss the boat. That's going to happen, right? How many that is, you know, who knows? But I think that number is going to, that number is going to be probably higher than what we expected to
I
be.
agree.
Yeah, also, like, we can look to whatever the final amount of Spark that ends up being unclaimed, and you can start extrapolating that to the Flair Finance airdrop and claim period, which we've had, 6 months to claim our Spark? I guess more than that, because you could do it before the actual snapshot date. So then you think about, okay, it's only a week. Less people are going to be claiming doing the D-Flare for Y-Flare swap, probably, than people that claim Spark tokens. Also, like, all the exchanges pretty much participated. So, like, there's a ton of people that had no idea about it that are just automatically getting it set up for them. And we're not going to see that with Flair Finance. So, yeah.
No, we won't. And then maybe this KYC verified wallet address might scare some people away too. But if you're on Uphold or Bitrue, you're already KYC'd, so you probably won't have to deal with that. So that's one thing there. The other 40 million will go to the APY cloud. This is kind of like an escrow, part of that autonomous distribution. 20 million will go to the foundation. And then the YFin pools, which some of you who are familiar with Flair Finance and did the beta, it's coming back. So with these changes, I suggest that even though you did beta already, I would do it again, because it looks like they've made some decisions on the rate of how much rewards they will pay the YieldFin Flair Farm distribution pools. Obviously, F assets will earn the most. So.
Yeah, and that makes sense to me, because a lot of the people minting F assets are going to be possible long-term holders of those assets, and they're going to need a little extra incentive to provide liquidity in the liquidity pools, because you can suffer impermanent loss. So, boosting the YFIN rewards rate in pools that will probably be lower already, I think is a really good way to get some people to take that leap and want to do that. So.
True. I mean, I have a new perspective on the impermanent loss now, because I would know I'm already earning fees for having my FXRP in liquidity pool. I'm already earning daily Spark, right? And I'm taking this LP token and I'm putting it in one of these pools to earn 4 times the rate, which is an allocation of 1,328 YFIN for the whole, I think, year that is. So you're earning in 3 ways. You have to balance then how much is the impermanent loss based on earning in those 3 ways. Now, impermanent loss means XRP's price shoots way up and you just don't gain the capital appreciation. But it also could be the negative, like it did the last 2 days. XRP's price goes down and you're in this XRP YUSD pool, and all of a sudden now you walk out, you pull out your LP token, and now you might have double the FXRP that you originally did. So it does work both ways. How do you think institutions feel about that, Michael? Impermanent loss versus, say, market making in the traditional sense?
I'm going to tell you, I'm going to think that the traditional markets are going to be hesitant to be playing in any of these. Maybe like super risk tolerant, like, maybe there are funds that have like a 1% or 0.05% of a percent, allocation that would want to play on that. But I don't think they would, just because in all honesty, it's just nascent, right? And it is high risk, but I think that's also a huge advantage to users who want to participate, right? Because I mean, ultimately, the YFIN total distribution is what, 11,000, if I remember correctly.
Yes.
So I mean, like, and this is if it does gain substantial traction, the value will be significant. I think it would be something that would put to shame, obviously, Bitcoin and Yearn Finance.
Okay. What do you think about what I was trying to get at, I guess, was the fees that the market makers are guaranteed to earn from people just swapping back and forth versus trying to do a bid and an ask and try to, get just a little lower than the retail and a little higher there. You know how it's a fight? With at least a liquidity pool, the fees are spread out. It really depends on how much demand, right? Those liquidity pools.
Well, that I mean, in this scenario, it's a little bit different because you have multiple ways to earn, so it balances the risk profile out quite nicely, right? So like, even if you're suffering impermanent loss, I would say, like, what we experienced yesterday, right? Correct. Was relatively rare, right? I mean, we do get corrections like that in the crypto market, and then they can go both ways, right? Very high parabolic or very low in a parabolic stance. But those are relatively rare. But ultimately, your normal variances are going to be covered by the other ways that you're earning in this, in how Flair Finance has set everything up. So I think that your risk exposure to impermanent loss is going to be actually quite less compared to other platforms. Hopefully that answers your question. What at least what you're looking for.
Yeah, I was just looking if it's going to attract, I'm not saying it's going to attract every market maker, but will it attract the same ones that go to Uniswap, or even give them more incentive to go there? Because we know it's going to attract retail.
So I think if it depends on the basket, I think that's what's really that YUSD. If that YUSD is what we think it is, then 1,000% yes.
Okay, that's what matters.
Yeah, that is like my 100%. It all depends on what YUSD is.
Okay.
For the whole thing.
Okay.
So.
Just so the audience knows, impermanent loss doesn't mean you necessarily lose any dollars. The market maker will get the exact same amount of dollar value out when they pull out their liquidity. It's just the fluctuation of FXRP might fluctuate, so you might get more or less than you originally had. But we know in ODL and RippleNet, the market makers don't care if the price of FXRP is going up, XRP is going up or down. All they want is fees. Fees. And we know at high frequency trading, that's what I was kind of getting at. Is this a model that they could also use and arbitrage to centralized exchanges too? Like, say, they issued Tether, for example, on Flair, just hypothetically. How would an institution market maker get off and on Flair to Coinbase?
Well, like, they're going to have the KYC set up. So, they would just have to, so we know, that's a good point. I'm curious, they would need some other stable coin to get into that YUSD. So, however...
That's why I'm getting at, like, why that's the important thing, right? Like, if it's a basket, you have multiple avenues to come on, right? Because what I envision YUSD is as a basket is actually probably, if this is what I'm thinking, right? And hear me out. Like, if you want to come in with YUSD, you can come in with DAI, USDC, USDT, USD or TUSD, right? Like, all of the stable coins, you can just dump them into a YUSD wallet, right? And it would take them all in there. And as long as you can take them in, there's going to be an off ramp for that. And because they're KYC AML, right?
Mhm.
You're going to have a direct off ramp for that, right? Like the on ramps and off ramps for stable coins are going to be there. So I don't think it's going to be that big of an issue. I mean, Patty,
Okay.
I don't know if, I mean, do you understand what I'm getting at?
Yeah, no, absolutely. I don't think I don't think it should be an issue either. I think
I
it
don't
should be all
either.
right.
And we can't dismiss the fact that the XRP ledger is connected to Flair network with a two-way bridge. So at some point, these assets could move onto the XRP ledger, and XRP could be used for arbitrage and stuff. It's going to be interesting to see how the agents ecosystem develops, the signal providers ecosystems, the XRP ledger's gateways, and then market makers and institutional participants in Flair Finance. We don't know who their partners are behind the scenes. We have no clue. And then we have Trustline. I think that will be a complementary composable aspect, because RA, unlike what Michael was saying there, RA is a decentralized stablecoin pegged to the US dollar. So that maybe has its own pool with YUSD.
Yeah. And I mean, so like kind of going back to this market making conversation, or you can also think of it like, let's say a high net worth individual, when you have all these like layered in, additional yield streams for providing liquidity, like via F assets or Spark or something like that, it gives you way more of a buffer against impermanent loss and things like that. And plus, like at a certain point, you have a lot of money, and you may just want to sit there and earn fees off of that. Like, if you have multiple millions of dollars and you're earning like 5 to 10% a year, that's something somebody can live off of. So like that, I feel like the liquidity pools are like very attractive for people with a lot more capital. It's like when you have a little capital, you're like, all right, well, maybe price appreciation is my way to get a lot more. So we'll have to see how that plays out. But like, I imagine people with large stacks of tokens are going to want to get into those, at least with some percentage of their portfolio. And that's the thing that's nice. Like, there's many options. So like, you can spread out, how you're utilizing your assets too. It's like, maybe you don't want all of your FXRP to be exposed to impermanent loss in case it goes up. So you just take 10%, put in a liquidity pool, and you're earning yield right there just from that. And then you may be waiting for, you're still going to get the Spark rewards from the Flair network system for minting FXRP, and you may wait for some price appreciation there, or do something that doesn't have impermanent loss. It's like, it's nice to have options for once, instead of just like holding for the most part. It's like so many different things you can do, and you can tailor it to your own individual financial situation, which is great. It's like, not, there may be one best way to be hopping between everything to get the most yield, but like not everybody needs that. And a lot of people don't have the skills or the money to make that happen. So just having all these options where you can see like, oh, well, if I can make like an additional $4,000, a month or something from getting yield from various streams, like that can be a lot to somebody. I mean, I could live off $4,000 a month if I really, if I want to. So it's kind of crazy, just like what we have going on here. And then, we still have more things to be added. Like I saw Brian Brooks talking to Julia Chatterley today, and they're asking, what do you think the volatility's from? And he's like, it's from a lack of liquidity and proper hedging tools. It's like, we don't even have derivatives yet built out on Flair. And as you get those, it helps people, speculate on the future prices of assets, and, adds more liquidity in the long term, and also like reduces the volatility shock. And the fact that this is all KYC to AML, since like derivatives are securities by nature, we already know the SEC is kind of strict with cryptos. It's like nice to see that can come in seamlessly into here with that like solution already built in.
Well, just to throw that out there, the SEC can't go near any of the DeFi, is my understanding, because this is all software. Yes, FinCEN does KYC and AML, but I believe there's no investment of any money here. Nobody's investing anything. Nobody's claiming a return or a profit from the efforts of one. It's saying that, it's a community driven DAO distribution. There's no way in any way could be considered security. Any of these assets, really, right? Like, am I pretty?
No, you're right.
sound
I'm getting
here?
to the point where when you have derivatives coming into play,
Yes,
that's when
I
they're
agree.
more like securities. So like the fact that they already have the KYC, AML, and the tax solutions are going to be built in, I think that just lends to that coming sooner, or this being the Flair Finance ecosystem being somewhere that somebody would want to build a project to get that stuff out there to the Flair
Gotcha.
network. Yeah.
All right, so I guess that's my question to Michael, because that's where I've always seen this going. It's only a matter of time before somebody builds a platform that's institutional grade, will conform to regulatory requirements for institutions and enterprises to build front-end CeFi for their users and then take advantage of DeFi on the back end. Do you think that Flair Finance and maybe RA and other things on Flair will finally bring that next business model to the mainstream, in the future, where they abstract all this stuff behind farming and just offer their customers the ability to earn yield on a nice, clean...
I think they're moving in the direction, right?
Yeah.
I mean, obviously, Flair Finance is moving into a DeFi solution. I mean, we know that. I mean, what I think is like actually the linchpin towards moving towards, I guess, mainstream use, not only at the enterprise level, but at the consumer grade level, everyday individual level, is trust line, and it being essentially a variant of what we would all consider a credit card, right? At least that's what I understand the direction that they're going. Now, when it comes to moving into like enterprises coming onto Flair Network, I think what it really comes down to is what Patty was just expressing, is what if we can get true derivatives on here and build an ecosystem that's directly related to issuing and trading and leveraging derivatives, then absolutely. I mean, it seems to be that Flair has the ecosystem to do it, and it's backed by the XRP ledger, which we know the strengths of that, right? So it seems to be the perfect storm. The only question is that what's the tipping point to make that happen, right? I can't answer that. I mean, I don't know if anyone can answer that, but it seems to be that we're moving in this direction and the dominoes are starting to line up. But what tips that domino over to make it go in that direction? I don't know, but it's going to have to, right? It cannot continue to move in the direction that we've already gone in terms of society, in terms of how we're managing capital, managing money, and the different platforms that we do it. So someone is going to figure out a solution. And I'm not going to say that's the Flair network, but I will tell you that the team has a history of dealing with derivatives, dealing with machine learning, dealing with quantum computing, dealing with a lot of the stuff that are obstacles, not just now, but obstacles 20 years, 30 years, 40 years, 50 years down the road, when this is really going to be a pivotal technology that's going to truly change the world. And we're just at the cusp of it, right? I mean, your question is something that I can't answer. I can only allude to that. I think that, yes, it has the capability, but we're still early.
Okay.
Right? I mean, maybe.
Are we moving to DeFi 2.0?
I think so.
Yeah.
I think we're
I was looking for.
Yeah.
Lower gas fees, more incentives, more security audits built by institutional grade KYC, AML, and starting on a clean slate with Flair.
Well,
right.
I have one thing to say about DeFi 2.0, right?
Okay.
And it has nothing to with Flair Network. I got an email today, and I thought it was kind of pointed just because of what you just said. It says I had an email, and maybe a lot of people in this live stream got it, but it was from Uniswap. It says Uniswap 3.0, right? How we're moving a multi-billion-dollar platform to the future, and Flair Network's already doing it.
Yeah. Yeah.
You know, and that's the thing that I think is like, you know, when you say that, yeah, it's totally possible. It's 100%. We're already moving there, and you see everyone trying to get there now, right? It's all about market advantage, and you know, if Flair Network does it right, then I think it does have that potential.
Right? I agree, and I think we can't ignore that. You know, the XRP Ledger's DEX has an order book built into it. I mean, you have an order book DEX, and then you have an automated market maker liquidity pool DEX. So you have the two things put together. And if Ripple really has this inter-exchange liquidity network, I mean, that would be the final piece. I mean, that's why I'm so bullish on XRP and what Ripple's doing. I just think they're by far the best positioned to accomplish what Michael and Patty are hinting at that can come in the future. That's why I'm continuous bullish.
Well, and so you can think about, you played this Chris Larson video a few times in a couple of the past videos, and you know, this is him like in what, 2013 or 2014, and he's saying like, you know, people are trying to build things that will fit what the current transaction throughput is in today's world. But like when we have like the Internet of Things and streaming payments and micro payments and all of this going on, then, you know, it's going to be way exponentially more transactions happening on a daily basis than what happens now. So like all of this allows money, like it reduces barriers to entry for people and, you know, financial inclusion globally. So money is going to be moving around way faster in these DeFi ecosystems than it ever did in the traditional system. So like these networks need to be able to accommodate that. And, you know, that's what one of the great things about Flair Network is, the consensus mechanism that they're using with FBA, and then the advances in consensus with Avalanche on top of that. They're going to be very well positioned to handle that kind of throughput in the future. So it's like, you know, you look at all these different platforms, but it's like, all right, in the long run, like who are going to be the winners? Like if you're good at trading right now, like that's awesome. I'm glad like you see, you know, maybe you saw Ethereum early on and hopped on that. But like eventually when more and more volume moves over here, and with the way the current traditional system is going, I mean, inflation's starting to hit. So like it's a matter of time before people start realizing this. And we can see that people just pile into cryptos, into stocks, because they have to get out of the dollar. And Michael, you were talking about what's that like, you know, moment that spurs this. And to me, it's just like either some kind of credit freeze or just inflation really starting to pick up. So like inflation has been held down for the past like year and a half while they've been printing all this money because they locked down the world's economies and people are scared. So they're not spending, money's not moving around. And then we finally see a bump in the velocity of money on the Fed charts, you know, within the past month. And all of a sudden you're hearing, you know, X, Y, and Z commodities moving, you know, increasing and whatever, like it's inflating the prices of it. So like, I think we're moving there and it's happening quickly. We'll just have to see, you know, how it all plays out. But, you know, there's going to be, people are going to probably flee the traditional markets. And if you're set up to handle them, then that's a great opportunity.
Yeah. I mean, people are going to go where, I mean, they have the greatest value.
Exactly.
You know, I mean, if you look at Venezuela, I mean, I don't know if anyone knows the history of that. I mean, people were having wheelbarrows of money. You know, money can easily become, the cash that you have can easily become worthless. So, you know, I mean, what will happen is eventually everyone will always move to where they can accumulate and protect their wealth. You know, you don't want to be carrying around a wheelbarrow of worthless paper, right? You know, yeah, you can print it on your printer at home, you know. Now whether someone takes it or not, I mean, that's really a question of, you know, the backing of what your currency is. Who knows? But you know, I do think that we are moving in a direction that it inevitably will be something that people are going to exit fiat currency. And I think we're seeing, I mean, it's always been that way, right? Like, it's always curious to have this conversation with people, and they always kind of like talk about cash as this, but it's like there's no difference between cryptocurrency and gold when you really think about it. I mean, gold has very limited industrial value in the grand scheme of things, but people find it as a safe, have always found it as a safe haven. And now we see that crypto is starting to also move in that territory. And it's not just Bitcoin. The concept that Bitcoin is just the only store of value, I think, is a very naive concept, because not only from the sense of just like single token value, but also value generation over time. It's all about, you know, how you manage your wealth, right? The more than it is just holding on to your wealth. But
Yeah,
I think we're moving toward that direction.
yeah, and like what you're saying with like Bitcoin's not the only store of value. Well, I mean, like when all these cryptos pretty much move together anyways, it's like, what is that argument even? You know, that people are making that's Bitcoin, you know, is the only store of value. Like if Bitcoin goes up, then all the other altcoins pretty much go up. If Bitcoin goes down, then all the, you know, all the altcoins go down. So like they're all very tied to each other. And yeah, Bitcoin has the most money in it. So, you know, it leads the market up or down. But it's not like, you know, most of these coins, if you had just been stacking in those instead of Bitcoin the whole time, you would have been better off. And it's like if Bitcoin goes down for a long period of time, then all those coins are going to go down too. So, but the nice thing is with Spark, which I mean, I actually think has a case as a store of value, since it's like, you know, its design use case is to be used as collateral. So it's being locked up. And if more value keeps moving into the Flair network over time, it's going to, in relative to how much more Spark is being released into the network, then, you know, we're going to see the price just have a natural upward pressure on it from its actual utility. And then when you couple it with built-in yield, it's going to make people, you know, less likely to sell. So I think that's just a lot of things that play into Spark, like being a huge part in the future.
Yeah, no, I agree. I think the huge advantage with Spark is that, especially now that's tied not only with Flair Finance, but you know, I'm a big advocate for Trustline, right? But now that you potentially could have a off ramp for your compounding wealth, right? In again, in fiat, you know, I don't think that we're going to be in hyperinflation in the next month or whatever. You know, that's not a conversation that I think is um, realistic. But you know, it's nice to have an option to, um, if I want to go to the grocery store, potentially. I don't know how Trustline is going to work, but I'm assuming this is how it's going to work based on all the advertising that they've given, to take what I've earned through you know, compounding my wealth in Spark, and put that in Trustline, and then have a direct fiat off ramp. And I don't think that people understand the value of having all of these. I mean, there's one thing of just having like ways to earn revenue, but there's another way, there's a whole other part of that, which is ways to actually spend your earnings, but not truly spend them, have a mechanism to spend them, but also like pay back that and retain your wealth. That is huge.
Yeah. And I mean, so like think about like, let's say Trustline. So this is 100% on their roadmap. Like Matt Rosenden has confirmed, they are going to build out fiat on and off ramp for Trustline. So like if you have a card where you can essentially just facilitate paying for stuff, like eventually the Flair network can basically become your bank. You know, you're getting yield at every, you know, corner you turn. Sure, you're going to have some fluctuation in the price, but you know, that's something that you may be willing to do because you don't trust the dollar at this point. So like the more like easy things are to use, as far as taxes, compliance, just moving money around, people are going to want to do that, especially the public that doesn't understand crypto. It's going to make it so much easier for them. And it's just a huge thing to lower like these barriers to entry. Like just think about like why maybe iPhones aren't, you know, may not have the most bells and whistles on them compared to like Droids. But I mean, this thing's 10 times easier to use than any Android that I've been on, especially for someone that's not like very technically capable. So if you have those kind of things built into, you know, one of these decentralized networks, it's just going to help, you know, I guess kind of push people towards it in a way.
Well said.
No, I'm saying.
Um, I just want to address one thing. It's been asked twice today. I'll answer it. Maybe you guys could throw on top. So it wasn't. It was Hugo who brought this up, and I guess Digital Asset Investor says if you sell your Spark on Bitrue and buy, if you sell your Spark IOUs on Bitrue and buy IOUs on Poloniex at the current rate, you will basically 5x your holdings. Then you get 15% of the first allotment. Is like initial investment. Well,
That's Franken math.
that's
Oh my
Franken
gosh.
math.
There's something
Exactly.
called we have time value money opportunity
you.
costs. I'm not saying that that could not be a better route to go. It's very possible it would be, but just saying that is not an accurate way to portray it. Like
I'll give you
Michael, you go in here. Yeah, I know
I'm
you.
gonna give you the easiest answer, which is where did you buy it? Did you buy it like whatever 20 cents when it launched? Then sure, you probably could do that. But if you bought in at like whatever it is right now, like $1.60 or whatever, no, it's not going to happen. I will say that they both have their advantages, and all of the IOUs are risky. I'll leave it at that.
All right, let me just make it. I'll break it down in simple terms. The Bitrue IOU, if you buy it, you get a 1-for-1 that amount the day Flair goes live, and that's what you get. If you buy a Poloniex IOU, you're buying the whole allocation, right? And then you get only 15% of what you buy of that Poloniex Spark IOU. And then you get the full allocation distributed you 3% per month. So when it comes to Flair Network, there's certain people to listen to and certain people not to. But it's always good to ask questions. I'm just saying. I'm being honest. I'm not saying anything. But Daniel Jackson asked a great question. He goes, "Does it basically 5x your holdings?" I don't know about that, because then you're delaying receiving all this Spark for 2 to 3 years when you could be participating early on and earning massive rewards. So like what Patty said, is it? I don't think so. I wouldn't do that. But,
Yeah, I mean, it's very, like Michael said, it's very dependent on where you bought it at. Like if you had them at a really low price and the ratio between the two prices is, far enough spread. So if you can get the same amount of your Poloniex IOUs, if you get 15% of that is equal to whatever you were going to get on day one from Bitrue, then that's where I would say, yeah, definitely. But like, that's only going to apply to certain people. If it's less, then you have to take into all the factors, like what is the time value of money? What could you have earned in the meantime when you were missing X amount of Spark? And, we already know that there's going to be 2 ways right off the bat for you to earn interest on your Spark. So like FTSO delegation vote and then collateralizing F assets. Now, one thing I'd say is like, if let's say you put your Spark into the F asset system to be used as collateral right from the get-go, well, like if in the first week or two we have 100 million or 200 million F assets minted, then that's a ton of opportunity that you're missing in yield there. So like it still could be more profitable to do it that way, but you need to take into account many other things other than just like, oh, look, the total amount of Spark I'm going to have is be greater in the long term. So just take that into account if you're thinking about that. That's all I have to say. It's not just as simple as, like, oh, well, this is going to be more over time.
And I think that's just the highest level of risk exposure.
Yeah.
Don't let's not get into the conversation about tax liability and all the other stuff that go along with that, so
don't get Mickey started.
Yeah, well, I know. I'm just saying, I think it's risky. You know where I'm going with that. I just think that people got to be smart.
I know, be smart. Yes. All right. Last thing before you do wrap this up, there were just a couple questions. Don't get too focused on a couple exchanges going down. There's hundreds and thousands, hundreds of exchanges. There's going to be even hundreds of more on and off ramps, like Michael just said. As these institutions and banks, all they're going to do is link you right up to fiat. I just saw on Venmo today, in New York, you can buy crypto. Yes, you can't send it off there, but you will soon. And that's another on and off ramp that avoids Coinbase. Trustline is going to have the same version. It'll have an on and off ramp. So don't worry about these exchanges going crashing and whatever. They'll go to business. Somebody will replace them. You know?
Yeah. I mean, we're
Institutions.
moving on chain. So
Yeah,
like, I
moving
mean,
on chain.
my goal is hopefully with Flair Network, I'm hoping after the first 6 months that I barely have to keep any fiat in my bank account and I never have to touch a centralized exchange again.
Yeah.
I just do all my swapping on a DEX, and now you can wrap tokens from the Flair network onto other blockchains. Like, let's say I want to trade into Ethereum. Well, they're going to be wrapping Ethereum right off the bat. So I can trade for wrapped Ethereum on the Flair network, or I can wrap my token and take it over to the Ethereum ecosystem and, trade there. So there's just going to be a lot of options to eventually avoid using these exchanges ever. And then if we're going to have built-in KYC, AML, tax reporting, trust lines building a fiat on and off ramp, we're going to see institutional players connecting into the Flair network. Like, this is like the decentralized banking kind of dream. So I'm just very excited about it.
I agree. And the XRP Ledger's DEX is the exchange of all exchanges, the most superior exchange that's ever been built on chain. There's nothing else. Look at Stellar. They're using their exchange a good amount, and with gateways and on and off ramps, don't worry about Coinbase and all that. We'll have the XRP Ledger DEX. ZOM, Sologenic is another one that's coming out. So soon we'll see that collateral maybe being used in DeFi and Flair Finance. Like, imagine putting up your Tesla stock in a Flair loan and borrowing against it, or putting in a trust line Probity Vault and borrowing against it. Who knows? The composability is going to get, very complex and extravagant, but that's why we have all this transparency. You could get complex because the smart contracts could be verified. And I think the KYC, Jeannie asked, how do you KYC AML from self-custody? You'll have options like Global ID, Civic. There'll be options for you. And the last thing I'm just going to say is, if Flair Finance is doing this, don't be surprised if Flair Network does it too.
I know, that's what I was thinking. I was like,
with you,
yeah.
Probably.
I mean, I would think that's outstanding if they did that. So
yeah, I mean, all they need is a pay string address and then hide my privates. They don't need to know my social. You don't need to know any of my specific details of my name. Just Mickey B. Fresh at, whatever, Flair, team.com, whatever it is, the domain. Or Handshake's another network. I know you looked into that, Michael. I think that's really fascinating with the domain names.
I just wouldn't be surprised if it's just going to be Global ID enabled. I mean, because to me, that's just the easiest solution. I mean, Uphold's already using it. I mean, and they're integrated with, essentially they're tied into everything. If you catch my drift, to me, get a Global ID, right? And probably I'm going to assume some wallet also. Just that's my speculation. That's
like Interledger. That stuff's all tied in. So
you get my drift,
it seems
right?
Like, yeah.
Global ID is SOC 2 compliant. That's pretty high up in the business and financial world. Does it get much higher than that, Michael?
Nah, as far as I know, I'm not that kind of expert, but I know that SOC 2 is huge. So from an enterprise level, but I will tell you personally, I've completely integrated a Global ID and I love it.
Me too.
So, and I use it for all kinds of different things, all the way up to going to the airport. So
really?
It's great. Yep. It's awesome.
All right. I got to ask you about what else can you use it for. I have it. It's great. I love it too. I just can't use it on Uphold because of New York and their shenanigans. But I think on that note, everybody, we're going to wrap it up. Any last questions here? Mickey, here, look, Patty, look at this one. Patty and Mickey need to get their own personal NFTs from Flair with some sort of special yield.
Yeah, I'll do like an NFT where basically like you send me 2 Bitcoin and then I'll send you one back. That'll be my yield.
No, we're going to see a whole lot of more.
Perfect Ponzi scheme.
Yeah. It's like, hey, this NFT may go up in value though.
But in all seriousness, did anyone know that Forte minted 900 NFTs or whatever they said, and they're a unicorn worth $1 billion? Nope.
I did see they're worth $1 billion.
Yeah.
I did not see the NFT thing. You're
Yeah.
gonna have to send me that.
Yep.
Where did their valuation come from? Is
I
that just
have
the initial?
no idea. I mean, their
Is that
patents.
Private offerings, yeah.
Who knows what they're doing behind the
$1 billion
scenes?
for a startup. I mean, Forte is essentially a startup in my eyes, and that's
Yeah.
Ripple funded them with
serious.
500 million, though.
Yeah, but I mean, that's serious dough.
It is,
Yeah.
right?
Serious money for
It-
for that kind of enterprise. But I mean, I guess the eye of Sauron maybe should go towards Forte.
Yeah, I mean, I think it's a marketplace to allow for new business models for small value. It's one thing you can't do on, Ethereum and things like that. So we'll see. I'm excited about Forte, but I mean, Flair Finance white paper, step one. Let's see Flair Network release the damn interface for a Web3 wallet. Like, that would make me very happy.
Do we know if some wallet is Web3 enabled?
It's not. It's only XRP Ledger, though. Web3 enabled, I believe, means that it's browser extension involved, right?
Well, I mean, you can have a browser like MetaMask has apps that like a MetaMask has a browser extension and an app. So I don't see why you can't have. I mean, I don't want to boil the chat away, but why couldn't they?
I think Interledger is going to underpin it, is my guess, because they're going to want the on ramp and off ramp to, like, stream payments to content providers and stuff. They're going to want people to use the same wallet, and maybe that will connect into your Zum. Who knows? Forte's got a bunch of patents too, so I'm not sure, Michael, what they're going to do. But Hugo, tight-lipped, won't say anything about the wallet. So Toho Labs said they're building the integration. That's all we know. That's it. I'm holding out for PolySign. On that note, I think we're going to wrap it up. Anything you want to say, Patty?
No, not really. I think I'm good to go. That was a lot, and we're going to be diving into that, especially the math here over the next month or so. Nice thing about Flair Finance seems more complicated to me than Flair Network, but we have extra time to learn more about it. So don't be overwhelmed with a 33-page white paper or anything like that. Like, you have time. We're going to be breaking it down over time. And as we see the Flair Network get up and launched, it'll probably change our thoughts about what's going to happen with Flair Finance. So,
okay, hold on 1 second here. This 50KT, the Avalanche patent, there is no patent. The Avalanche protocol of consensus was written by an anonymous team called the Team Rocket. So nobody owns the patent to the actual consensus. Just throw that out there. And what do you think of fiat plus XRP equals CBDC? It means a boost to XRP. That's what I say. All right. I think we're going to wrap it on that note.
yeah, sounds good.
Thank you, Michael. You're a great
thanks
guest.
for coming on.
You had
guys.
a great perspective, great questions tonight. I know it was a little over everyone's head, and we kind of threw that white paper at you, and it was a lot. But I do encourage every one of you to read it. There's tremendous opportunity to make money in there, and learn it now so you're not scrambling when the time comes. All right? Join Flair Finance's Discord, ask questions on there, and I encourage you to join the beta. If you want to learn more about strategies about the Flair Network and Flair Finance, you could join our Patreon group. Links in the description below. I'm Mickey B. Fresh.
Patty XRP.
Michael L.
Michael, sorry. Yes. You guys got me on the spot.
We've done it enough.
Thank you for all the super chats. Thank you, moderators. Great conversations today. Have a good night, everyone.
Yeah.
And we are not financial advisors.